So friends, hello everyone, it's me here. Today we have a new video. We're going to trade using the Aligator indicator. I have already set it up. The expiration time is 1 minute. The trade amount is $100. You can find this indicator in this tab, third column, the very first one. Set up this indicator and repeat everything I showed you today because it works and you can make money with this strategy. So let's choose our assets. We take absolutely any assets with a good payout. As a rule, I trade assets with a 92% payout and very rarely go down to 60%. The higher the payout, the higher earnings, obviously. Set these indicators, assets, and start trading. Boom. So I think that's enough. Let's start with the very first asset. The currency pair is Australian dollar to Canadian dollar. Let's get started. I'll briefly explain the indicator's working principle now. There's nothing special you need to know here. Everything, as always, works very simply. There's an indicator. We set it up and leave the standard values. It is already set up. Your task is only to learn how to analyze it and open trades on time. Look, we have three moving averages here: blue, red, and green. When the green crosses the red and blue from bottom to top, you can see growth on the chart. When the movement goes the other way, when the green crosses the red and blue from top to bottom, then the movement is downward. So all signals from indicators on any platforms are always delayed. Your task is simply to jump onto this moving train in time. If you notice such moves and open trades on time, when, let us say, some trend has already formed, then the trades will, of course, close in profit. For example, around this level, a signal formed here, meaning all the moving averages crossed. So we still have time to open a buy position and earn our commission on top. So keep in mind that signals come with a delay, so there's no need to rush. Don't rush things. Let's begin. You can act ahead of time. I mean, if you see that the same situation repeats over and over, meaning a crossover happens and then, let's say, the trend declines. Then on a new crossover, even if it has not happened yet, if there are signs that the crossover will continue, you can open a trade in anticipation of the signal continuation, either upward or downward. Let's look for a trade. For example, let's take this asset, Canadian dollar to Swiss franc. What can we notice here? At the peak, a crossover happens in the opposite direction, meaning the movement is downward. In this interval, notice that there was correction, meaning upward movement. Price bumped into the resistance zone, moved into sideways channel, then broke the support zone. Here, the movement is downward, then a correction, and most likely the downward move will continue since the crossover has just happened. So we open a $100 position here and wait for the result. If there is a loss, we always have the ability to cover it. Our balance is enough to cover large losing positions, so let's move on. For now, let's look at the next situation and pick assets. The next trade will be opened on euro to Japanese yen. Here the position is upward. I open it immediately. Let's wait for this trade to finish and then I will analyze the next one. You see the trend continued after the price made a correction. Everything works as simply as possible. No special knowledge is needed. No need to invent anything at all. See the crossover, wait for the correction as in the previous trade, or open immediately in the direction of the downward continuation. Here the picture is as follows. The price trend was bearish. Price reached the support zone. So the price low is here. Pay attention to how price behaves from this low, from the support zone. That is, at this point, it broke the support level, but then a recovery happens. The green candle fully covers the previous two, even the previous three red candles. This means that there is buying pressure in this area. And secondly, here I noticed that there was a crossover of the moving averages in the Aligator indicator. This is why I opened a buy position here, and as you can see, I didn't miss. The second trade closed in clean profit. Good. Let's look for the next trade. Here we have movement downward. The price reversed at the high. The trend has already been moving downward for a sufficient amount of time, and now there's a correction from the support zone. You see a correction move is happening. There are wicks both below and above. Pressure remains. Right now we can see that the green moving average is trying to cross the red moving average from bottom to top. That is a bullish signal that is forming here. But since the overall trend was bearish and we can count this move as a correction, we can open now on the continuation of the decline. That is, we're opening during the corrective move downward itself. And most likely we will also hedge here because the situation is risky and we open a little bit at the wrong point. Not at the moment when the correction is finishing, but on the contrary, when it has just begun to gain momentum. The crossover is happening, and essentially many people probably think that if they see a crossover in the opposite direction, they will open a position right now, in this case on the upside. Most likely many of you would have opened the buy here, but I take the previous move into account. The previous move started here from this high. Notice the price moved down, approached the support level, then moved up from the support level. As a rule, a move up from the support level does not always mean a strong reversal. For price to overcome this entire range again, it needs a lot of buying power, which is not there at the moment, since the overall trend is bearish. And this is how we lock in the third trade and profit again. Excellent result. We keep trading and look for next position. So look at the British pound to US dollar currency pair support zone here. For some time price was near the high, then a reversal occurs and a very strong move downward happens here. Let's take this interval, a sharp impulse down, approaching the support zone. From the support zone we can see volume building up. There are candles, usually green, there's alternation, but also notice there is these large wicks, which once again tell us that the seller pressure is still present. But also, buyer pressure from the support zone is also there. So in this situation, we will act smart. We will open upward on a correction because there has not yet been any large move here. So at this point, we open a long position. Despite the fact that you may notice divergence of the moving averages on the alligator indicator here, we are opening simply on a correction, not the idea that the price will reverse and change its trend, but just a correction. We do not yet have reversal signs. The only reason this correction is happening here is the support level that price has reached. That is how price reacts to levels. And knowing this, you can open and close your trades in good profit and grow your balance very quickly. I mean that you need some kind of link between technical analysis, understanding support zones and resistance zones, and understanding how indicators work. And this is how you will get trades like these. I'm showing you 4 trades without any cuts or anything, and this is the result they bring. So, friends, go for it, try it, test it. Let's analyze this final trade. There's nothing difficult here either, although here we do have a large price range. We draw a horizontal resistance level and a support level. We immediately notice that the price is moving here in the sideways channel like this. From the resistance zone, movement is downward. From the support zone, movement is upward. I do not recommend trading in situations like this. You need to find situations for yourself that are more or less clear to you. Situations you may have traded before. In any case, even if you do not realize it, over time you will form your own view of the market and you will filter situations and understand which ones you can trade and which ones are better left alone. And this kind of situation is one of these I wouldn't trade. So if you see something like this in the market, skip it. Here's the opposite situation when the downward move has already started here. And as I told you in the beginning, if you see that the crossover has happened and let's say the movement here is downward, expect the movement will continue for some time since the crossover has just occurred. Yet, they may be corrective moves, but you must be ready for that and cover trade only after the correction happens. For example, price moves down, then moves up, you take a loss, and then you open a position again, specifically downward, meaning in the direction of this decline continuation. In this way, you can lock in fairly good profit and earn well. So 4 trades in total, we reviewed today, we got 4 wins. Also show you 2 situations and explained how in general you should not do it. I hope you remember all of this, can repeat it, and of course make money. Thanks everyone for watching. Until next time.